Going everybody, welcome back to another video here on the stock market SPY. Ideally what we're doing is kind of showing you guys price action, how to understand when things are going on the long side and they're going on the short side, etc. So yesterday we posted a video talking about the long target being 643.78, which is that SMA. So I'm just going to delete some of this stuff here so it's not confusing anyone. So essentially what we do is we operate on a 30-minute open, high, low, close system. Essentially when the market gets below the SMA, that means the market is generally neutral or bearish, but definitely not long bias. And then when the market gets over the 50 SMA, we generally look to start trying to press the market back to long. So to give you a little bit more context, if we zoom out here, you can see again, when the market gets below the SMA, we look neutral or bearish, but not long bias. Then when the market gets back over the SMA, we start to look back long bias. When the market goes below the 50 SMA, we go neutral to bearish, not long bias. When the market gets back over the 50 SMA, we generally look back to the long side. So real quick, what I'm going to do is show you how long we've been long bias this market since. All right, so you see where that SMA is at. All right. I'm going to make this a a pre-market chart now. Excuse me. I'm going to turn this to pre-market sessions, extended trading hours. Perfect. All right. So essentially, since yesterday, right at the close, you'll see the price of the market finally got over that SMA. So essentially, you've been long-sided at market close. Since market close yesterday, the S&P 500 has flipped back to positive territory. When that happens, traders, algorithms, and banks start to go to the long side, or algorithms flip and start buying equities long for the most part. So essentially, the market's flipped back to the positive side. We are no longer macro short. We are now macro long the market. So this morning, we've been trading longs up, so on and so forth. So essentially, the way this is going to work is as long as the market stays above that SMA, we will stay on the macro long side. Just because the market's above that SMA does not mean there won't be pullbacks. For example, look at this. Look at our last sell signal. Remember, the sell signal would be the market going below the SMA. So real quick, you see market came down, breaks the red SMA, and look at how big of a sell-off that is. Now look at how big of a reversal long you have before the market crosses, before the market crosses above